Hey guys and girls, hopefully everyone is having an awesome April. I just saw a little note here from Tristan, am I in the right place? You are, if you are wanting to see my ugly head, Ridhwan from One Path Accountants, who's our trusty accountant. So yeah, with it, hey Luke, hope you're doing well. If everyone could just let us know in the comment box that you can hear us all right, you can see us, and you're excited to get on with tonight's webinar, and we'll get straight on with it. So awesome, thanks Nick. Cool. So hopefully everyone's doing well. 2021 has been a fun year, so it's been exciting so far.
As you say, a good time to be alive.
Oh, I've never been so excited to be alive. So for those of you that don't know, this is Ridhwan Hannan from One Path Accountants, and tonight we're going to be talking about all things with the budget, all the tax things. So keep your questions coming through. If you've got any questions, hit up Ridhwan today, and he'll answer it. So as I said, like I've always gone throughout my whole life thinking, shit, I wish I was born 10 years earlier, 20 years earlier. Imagine being around in the 80s buying, or in the 90s buying, and all that sort of stuff. And looking back, I can very excitedly say this is. I was actually talking to Linda, our office manager, the other week, and I was like, these are the good old days, right? Where we are right now is the good old days. So yeah, it's exciting. There's lots of things happening out there, and lots of opportunities, and yeah, lots of.
Buy the house and the one next door and a motel up north.
Hey, what's that?
Buy the house and the one next door and a motel up north.
Yeah. It's this year we've turned into the hotel game. We've got 9.
Yeah, we're done, by the way.
Well, thanks, mate. It's yeah, nine motels, and they're not all settled yet, so they'll come online over the course of the next 12, 18, 24 months. But some really big moves. Over the years, like for those of you that don't know, I text Rid, probably like number one in my phone. We text all day, and predictions and fun stuff and weird stuff, and very controversial stuff.
Investments,
some investment stuff, but a lot of other random things out there.
Yeah.
And Ridhwan is probably one of the more conservative guys out there, and I feed him full of all weird and wacky things that he laughs and he goes, oh, it's not going to happen, but I don't know, it'll be interesting if it happens. And here we are.
Right.
20.
I always hedge my bets. Conservative accountants will do that. But look, in reference to what you've been doing and how the year's been carrying on since the start of the pandemic, where do you think we're going to end up?
We're exactly on track with what I talked about going back about 4 or 5 years ago, where we're seeing money creation like never beforehand. And one of the little notes that you just put up, you've got all these paperwork. Literally, it looks like a tax return going on here, guys. There's like paper all over the desk with Ridhwan with some notes and stuff, and he's come very prepared with everything today. And we just laughed. Like I've laughed since the day that I call it the scamdemic. Ridhwan's I could feel it like getting like really like uncomfortable.
We don't share that sentiment.
We don't share the same sentiment, but yeah, with it, it's, we don't see the same sentiment on what's going on out there, but financially and everything happening out there in the economy, what was discussed going back 5 years ago, we've had colleagues that laughed at us, people that we don't necessarily talk to anymore because just because their opinions and their mindsets and all that, that laughed at the start. And we're in $1 trillion worth of debt in a year.
Yeah, absolutely. It's going to get there.
We've got 0% interest rates. Everything's gone up in value. The price of metal for in a car, right? I was reading something about a month ago. I think I may have said it on Facebook Live one day. The price of metal to build a car, it used to cost about $1,700 for the raw materials, just the metal to go into a car. That's now gone up to over $3,000 in the last 12 months to build a car. So any scrappy old car that you can find on the side of the road for $200 or $500, the metal is worth more than that. So the the opportunities that are in the world today, the opportunities were already here and are starting to go. As things start to progress and as we start seeing the full effects of the manipulation of the monetary supply and the currency out there, the more everyone's going to feel richer or they're going to feel poorer. Just depends on what side of the fence someone's sitting on. Are they going to be getting richer or are they going to be getting poorer?
Yeah.
I know for our community, it's fantastic because we've seen so many people prepare and plan for this time. I know for myself, I'm so excited because it's like we've been able to foresee this financial calamity happening. It's like a train work. It's like watching Britney Spears in the early 2000s. You're like, this isn't going to end pretty, right? And that's the financial system. But
that's an interesting comment that Tristan's put up. That I'm not entirely sure I agree with it, because I think when we were discussing, 3 or 4 years ago, it's because of the system that created that having to feed this big animal.
Yeah.
And that's why we're getting these changing prices.
Yeah, so the market at the moment. So the question from Tristan here was, I'm on the Oz Finance Reddit, and it is generally agreed on the forum that prices right now because of FOMO. They're all off the rocket, right? They seem like first homeowners getting upset mostly. It could be FOMO, right? But let's assume that we've all got FOMO and we want to buy this glass, right? It's the last glass of water that's ever existed on Earth. So the last one that gets to drink it gets to live an extra 5 hours, and the next one that doesn't. So we all want to go buy this glass of water. The problem is that there's 5 of us in the room and we've all got $10 each. Who gets to buy it? Well, it's $5. Someone buys it for $5. But then if it goes to $10, everyone has to put 100% of their capital in. If it goes to $1,000, even if everybody chipped it together, they couldn't afford it. So FOMO has a level, and that is the jet fuel to pour onto this fire, but it comes down to the manipulation of money. These prices are not going up because we've got 10% interest rates. These prices aren't going up because we have to put down a 40% deposit. These prices are going up because it's free money, it's cheap money. There's 50 grand worth of stimulus checks for first home buyers out there. There's all these incentives which are pushing the prices up. If you didn't get 40 grand worth of first home grants and different sort of grants out there, or 50 grand, then how would people be able to afford these things? Because they certainly weren't able to in the 90s when they were only 200 grand or 300 grand. So, people can think that FOMO is causing this, but it's got nothing to do with that.
Interestingly, data that was released by RBA, and there was a pretty good ABC article about it, I think 2 or 3 days ago, where majority of the debt which is being onboarded is by new homeowners and upsizers. So people selling their properties, quote unquote, in a good market, and then jumping into something bigger or better. The repayments are the same because interest rates have come down. They might be getting out of what they have in terms of limitations on their properties, changing lifestyles and all that type of stuff. So it's not investors. The investors really haven't tipped their hat back into the market yet. So there probably is some FOMO amongst, the property people who are buying for the first time or upsizing, wanting to get in. But it's interesting that investors haven't really driven a lot of this demand yet.
Because they can't get access to credit.
Yeah.
Imagine when they do come to the table. Yeah. Imagine when FOMO does hop in. Imagine when people realise that their currency is dying. Imagine what will happen when they realise that this is the big giant Ponzi scheme. People haven't realised that, right? The whole system is a Ponzi scheme. The reality of it is that we were in a depression beforehand. The only way for us to get out of our so-called recession is to print our way through it. And they've been printing, just as Luke mentioned there, the printer goes because they just keep printing and printing more of this currency. People are using their house as a giant ATM. People go and pull the equity, they go buy a holiday, they go do this, they go do that. If they reverse monetary policy, which is what they did in 2016, it took a little flow-on effect and took 12 months for it all to show out that we're in a massive recession. But then the next following 1, 2, 3 years, we saw the banks starting to collapse. We saw the repurchasing agreements out there with the interbank lending really get impacted. And it was only until they turned monetary policy back that we started to see printing of currency and it going out there. If you can't pull the equity out of your house and you can't, I look at people's positions every day. it'd be very rare that I'd find someone that would have a mortgage less than what they paid for their house because they've done it to do a renovation, to buy a car, to, do whatever. And, that's what people are using their house for. So they need to keep propping this system up. So when people say property market's in a bubble, the property market in itself isn't in a bubble. The whole financial market's in a bubble, and the whole monetary system's in a bubble, and the fake fiat Ponzi scheme of a currency that we use that we call a dollar that we're forced to use is the bubble. So it's exciting to see that so many things are rising. It's not property that's rising out there. It's your car that's rising in value. It's your food that's gone up in value. Maybe if you guys want to put like little comments in the comment box and share with us, and we'll share it with the community of things that you have seen going up recently in your neighbourhood. Right? It doesn't need to be a property. Everyone just focuses on the property. But this isn't just an Australian issue, right? It's not first homeowners in Australia. I was talking to Gemma. Gemma's a customer service team leader here. She's from the UK, and she was saying that the budget just got released in the UK just the other day. And now UK have got first homeowner grants where you only pay 5% deposit. It's the same thing. They are printing so much money that this debt bubble is just like inflating and inflating and inflating. You're never meant to pay the debt off. There'll be a day where there's a thing called a jubilee where it'll be paid off, which won't just come as a form as a jubilee. This is the opportunity in the next decade where just so much currency supply gets printed. Half the people are going to be impoverished, just like Weimar Germany back in the 20s. Half the people are going to be impoverished, just like Zimbabwe is right now, or Venezuela. And that's where the opportunity is, because if you're holding on to assets, those things are getting inflated. An old laptop, an old mobile phone, second-hand cars, they're selling more than what they sold for brand new. So keep the comments coming with things that you're seeing going up. So at the moment, what I'm seeing here, if you're awake to everything happening in the globe, including the scamdemic, money printing, and the end of the currency, this is one of the most incredible opportunities of a lifetime. Mark, I have never been so excited. I'm 36 in a couple of months, got a lot of grey hairs, got a lot of battle scars over the years of things that I've tried to do and whatnot, and I have never been more excited than sitting here in 2021. 2020 was really, really exciting. 2021 has been even greater, and the opportunities out there are so fascinating. It's amazing, but not for everybody. Not for everybody. Noble, some dealer demo used cars have gone up by price to $4 to $5 grand more than what they were selling for the new models for exactly. So I just picked up a car. Got all different cars out there. Got cars for my staff. Got cars for all different people. Had to buy a car for someone the other day, and I put a deposit on it. And then the car had gone up like 10 grand since the time that I put the deposit on. So 2 months ago, I got this thing, it hasn't even arrived yet. Yeah. So that's the SUV one. Yeah. So, Luke, hamburgers, $18 for a hamburger.
Standard now.
$18 fucking dollars for a hamburger. Sorry if you got children watching this and Nathan's swearing. I had someone comment last time, but you must know what you're signing up to when you join this webinar. But $18 for a hamburger. You remember going back a few years ago, you could feed a family for $18. $2 a bag of chips, thanks. $1 can of Coke. It's like $4 for a can of Coke.
$1 hamburgers.
Exactly, $1 hamburger. Macca's hamburgers were $1 at the start of last year. Now they're bloody $2.50, $3.
$3.20.
Yeah, something like that. Yeah. Birch is gritting more. I can't stop gritting. So yeah,
that's interesting. Yeah, lads, I manage a Reese branch. We've experienced price increases every single month since last April. So plenty more are coming, and the price increases are 5 to 10% each, right? Do the math.
Wow. So let's just get this clear, right? So someone here manages a Reese branch, like plumbing equipment, and the prices of the products have gone up each and every month since last April, and there's many more of them coming. The prices increased to 5 to 10% more. So something last year's doubled. I've been fitting out motels, right? I've recently trying to find suppliers and how to get the suppliers and whatnot. I've got some pretty funny ways to get them, by the way. So I couldn't get delivery to a motel, so what I did is I just got the free shipping on eBay, and I'm basically like, it's going to cost $200 for a fridge to get shipped there, a little fridge. It's free shipping, cost me $200 for the whole fridge. That's a different story. But the cost of everything is going up. Doesn't matter what.
Yeah, absolutely.
But also the cash flow is getting increased. So as long as I'm expanding my cash flow base, that's getting increased as well as the items. So try and hold on to as many things as you can to take through this cycle. Filled up the car today, $1.90 per litre. How did that happen last week? $1.40. Jerry, it's just the exciting time of inflation. Like, this is just really early days. I made a video. It's actually my #1 hit on videos ever on YouTube and Facebook. It went pretty viral. And I talked about the hyperinflation. So if you haven't seen it, I encourage separately to this to go and check out just YouTube hyperinflation, Nathan Birch or B.Invested hyperinflation, because I said it wouldn't happen before 3 years. We're 1 year into this cycle. We're starting to see it, but it won't last more than the 7 years. So I reckon the next sort of 3-4 years will be the most exciting part. So I've tried to tell people about how inflation is happening and listing prices of things, but some people try and make the argument that is due to supply chain issues. Tristan, look, you can try and help people. I actually made a lot of videos on YouTube and webinars like this going back about 4 years ago, and I was yelling, I was screaming, I was like, why doesn't anybody fucking listen? Ridhwan remembers it, right? He remembers it. And
newspaper clippings of like what's going on.
Yeah, people wouldn't believe me, and they're like, "You're off your head." But now, like when it started happening, people are like, "Oh, well, what's going to happen next?" So just keep doing the right thing. You know what's coming. Prepare. Take charge. Set yourself up for it. Protect yourself. Protect your family. If they don't want to listen, at some point the penny will drop. So don't give up hope on what you're talking about. Holidays have increased heaps. Well, not at the Birch Hotel Group. They're still on the budget.
Who's taking holidays, by the way?
I don't know.
I guess overseas.
No, every time I go somewhere, right? So I just drove 8,000 k's the other day, and every place I went to, they were completely booked. On the weekend, I went for a drive.
You mentioned that, yeah.
I went for a drive up to Port Stephens, just randomly, just to check out a property. And I was like, maybe I'll stay here overnight. I went on to like the booking websites. I'm like, there wasn't anything available. Like even from anywhere from Port Stephens all the way down to Gosford, right? There was nothing. There was like maybe two. One was at Newcastle Airport and one was somewhere else. And they're like $600 for like little crappy motels. So people are going on these little local holidays, but yeah, so it's exciting. Did the banks relax the lending laws yet? No, they haven't. But there's lots of cool things, happening out there in the financial space. I think the banks, most of them are insolvent, and they have to just keep printing money to try and, remain solvent. That's where they're at the moment, because they don't make money from sort of removing debt. They only make money from creation of debt and creating more cash flow streams for themselves. So they need to keep relevant and ahead of the game. That's how they make their money. So, do you think we'll be buying houses with crypto soon? I hope so, because I've got so much of this inflated crypto I'm trying to get rid of. So, not that I want to get rid of it, but I don't want to have to go and convert it back to fiat currency. He wants to use that dodgy dollar that they're forced us to use. So, I just realised we haven't even started yet.
Let's get into it.
We've been excited just, talking about inflation. So today's agenda, we're going to be talking about, Ridhwan's going to be talking about what to expect from the budget this year. The budget will be coming out in about a month's time. We're going to be talking about property tax, new dwellings, potentially selling, and what sort of things you'd be facing, deductions that you can consider, prepaid interest, capital gains, depreciation, crypto. I'll leave that one to Rid to discuss. How it works from a tax view, record keeping, and capital gains. So on that front, if you have any questions, keep the questions coming through, and we'll answer them for you shortly. So I'll leave it with you, Red.
So the slide says property tax because we're just going to do a small update on the budget. So as Nathan said, the budget's coming down on the 11th of May. And Nathan and I did last year's budget post cap.
That was my most.
That was your favourite.
That was my favourite budget. Like I laughed for an hour because I was like $1 trillion in debt. I don't think people understand.
Not there yet.
Oh, $900 billion. Who gives a shit? We'll be there by next week. $1 trillion in debt in a year. We'll talk about your things a bit later, but yeah.
So today, interestingly enough, and these things generally happen in unison, the IMF significantly upgraded Australia's economic outlook. So basically what they're saying is that we had a certain trajectory where we were going up to recap or recoup what was the losses during the recession because of the pandemic. And now they've come out and said, well, Australia's actually gone up higher and it will probably reach there more quickly. So there's a couple of different things that you can take out of that. One, that Australia's done extremely well compared to other OECD First Nations, including US, including Germany, including Japan, including UK. They will potentially have steeper recessions because their recession was deeper. Our recession wasn't as bad, but it's pretty astounding. We're considered to grow 4.5% in the next year, essentially, and that's a pretty substantial increase on what is. So how that'll flow on to the budget, and interestingly enough, that came out through the Treasury's office, is that they're probably going to preempt a lot of changes in terms of what stimulus they were going to push out during this particular budget. And obviously last year's budget was delayed, so it hasn't really happened before because the times was quite unprecedented. They delayed it all the way to October. So this is a short turnaround budget. And I think that was strategically done in the sense that they handed out a lot during that budget, including JobKeeper, JobSeeker, Home Builder, Home Maker, everything you can think of, it all came at once. JobSeeker has had its increase and it's going to end in terms of the increase that was. JobKeeper actually ended this month. So there is some concern as to whether or not some businesses and some industries should be deserving of a targeted or focused JobKeeper or wage subsidy, which potentially could happen. So I've got, for example, all the pre-budget summaries here and pre-budget submissions. Virtually every single corporate body has said that targeted JobKeeper should be put back in. Yeah. So it's not going to be unheard of in a month's time if things don't go as well as JobKeeper comes off. They enter into something and they say, well, as a secondary measure post-budget, we're going to do something for tourism, maybe for real estate, maybe for a few different industries which have been suffering, still gyms, cafes and stuff like that.
Maybe tourism.
Maybe hotels. So there's also thinking there might be some geocentric related wage subsidies. So things like cafes in the city, so services in the cities, laundromats, hairdressers, all those type of services which effectively focus around workers in the city as workers have come away. And now there's, I think there was a stat by the IMF saying that 3 to 4 days a week now they're going to see long-term work from home. So it's going to change fundamentally what actually happens in the city, right?
For that article, I actually got it from the Liberal website whilst we've been talking, and I posted the Birch feed. So if you want to read through this while we're talking, I posted on the Birch feed.
Yeah, absolutely.
I actually just find it interesting. Like 2 things came to mind, right? Like we're talking about the IMF giving Australia the they upgraded Australia's economic outlook, right? Yeah. We're in the biggest fucking recession ever, right? We've printed $1 trillion worth of debt in the last 1 year. It happened in about 3 months of that. So if we just put $1 trillion in perspective, literally in 3 months of 1 year, we printed more money as debt than ever before in history. Ever before in history, all the money that ever existed, don't worry, we just eclipsed that in 3 months. And we've got a great economy.
Better than expected economy.
A great economy. Significantly upgrades Australia's economic outlook. I hate to see the other countries.
It actually says that. Yeah,
it actually says IMF significantly upgrades Australia's economic outlook. If you don't have Birch feed, join up to it, birchfeed.com. It's free, don't be a tight ass. But yeah, like we're seeing house prices move by like, I've seen house prices in 2021 in 1 month move 50 grand.
Yeah,
right?
so I think they moved 2% last month.
2%, that's fucking 24% in a year, right?
Yeah,
24% in a year, and we're in the biggest fucking recession ever. How does that happen? How does the house price go up? How does the price of everything go up? People don't have more money, they're going bankrupt. How could it be FOMO that's causing this?
So, to your point, is that they're cutting interest rates, they're providing stimulus, they want to be in a position where people have access to cash, spend the cash, engage with the cash, so they can push up inflation. Our inflation's been terrible. Wages haven't gone up in 10 years, but property prices seem to have effectively no cap, right? Lucky
And
for
the
you.
stock market, and
Absolutely,
and the car price, and the
everything.
used car market,
Right?
and the food prices. It's amazing. And one thing we haven't seen, I've never spoken about this really, and I'm going to make a specific video on this actually, velocity of money, right? We haven't even
Very
seen the
interesting concept.
velocity of that currency be used yet. We've just seen them created. It hasn't started swirling in the system. When that happens, that's when we start seeing the real fun and games. That's the hyperinflation time. But that's amazing.
Look, so one interesting aspect that we have here, I don't know where that's gone, is that there's an entire section dedicated to our debt strategy now. So our debt strategy and debt statements are pretty significant in the sense that gross debt is expected to be about 42.5, almost 50% of GDP at 30 June 2021, so in 3 or 4 months, and then 51.5% by 2024. So we're more debt heavy than ever before, right? So what you'll find in this budget is they need to curtail that, right? So the spending that they were going to do, they're going to draw it back. So they already changed the tax rates a couple of years, well, last year they expanded it, they brought it forward. So the larger brackets exist now. So people who are on 45 grand and people who are on 120 grand, they're getting taxed pretty similar, to be honest with you. So there's some argument there that those taxation brackets are a little bit regressive. But the receipts for the government, their income is tanking.
Yeah.
There's not enough there to be able to replenish what's going into the debt. So what you'll probably see in the budget, in a month's time, is that a lot of the stimulus has just been wound up. So I think JobKeeper and Job Seeker, now that they've been wound up, is giving the government massive 16% relief on what was the cash spend, right, which is huge. And so they're going to have to think of ways to be able to continue to bring in those receipts. So is that going to be through changes in property taxation laws? Is that going to be inheritance tax, which comes up? All these things are essentially items that you need to think about and future-proof yourself for, right? So someone like Nathan, who's got a lot of store of wealth in property, alternate assets, diversification of those assets into different types of things. You're not just a property guy. You look at revenue from everywhere.
I bought about 20 kilos of silver spoons yesterday. 20 kilos of silver spoons. Because I want to have diversification of that diversification.
Absolutely. So Nathan embodies what the government needs to do in the sense that they need to look for different ways in which they can draw in revenue, right? So there's only a couple of levers. We've had net migration of negative this last year, the last 12 months. So expect to see that lever go up. So you'll see a lot more people come in. You'll see the changes probably to the FIRB laws over the next 12, 24 months. You'll probably see a lot of changes to the education that we provide overseas, that to come in, potentially health tourism, those type of things to come on board.
Imagine, like, we've seen all these people go from Melbourne to the Gold Coast and all that sort of stuff, right? Like the markets, I can't even explain how the markets are out there. I'm never been busier. I've never seen the markets busier. I even don't have time to shave. I just look at the camera. I was like, shit, I haven't shaved for like a few days. So I'm too busy. Like, yeah, a few hours for you. But the markets, like, people have moved from Melbourne to Gold Coast and those sort of markets. Those things that happened last year, and there's been tremendous pressure into those markets. Not just because all this money is being dumped, but some of those markets have really taken off and exploded. People ask me now, oh, should I get in there? I never get involved in any markets over. People say, should I buy Bitcoin now? So Bitcoin was great at 3 grand, but not at fucking 80, right? The downside risk is too great. But imagine there's areas of Sydney which are selling for less in 2021 than what they were in 2016. right? So the peak to trough of those markets. And those markets are very high immigration areas. So imagine what will happen to some of those pockets when the doors open, right? People have been trying to leave Melbourne to get to Queensland. Imagine all the people leaving the UK. Imagine the exodus in the UK. This is people are going to be like, stuff this, I'm getting out. We're sick and tired of Dumb and Dumber, that guy from Dumb and Dumber that's like Prime Minister, whatever his name, Boris Johnson, right? We're sick of this clown, right? We were locked in our house for a year. I know people that are trapped in there. They can't even leave to get back home. And what's going to, what's going to happen when these guys go, now scrap this, I'm going to Australia. They're okay. I want to go and hang out with bloody, what's that, ball guy, whatever, like, what's the name? Chris Hemsworth. I want to go there, the new Hollywood over there. People are going to be wanting to come here. Where do they land? They move to the doormat to the country is Sydney. The doormat to the country are the capital cities. Like, there's so much opportunity. That's all I've just seen Jessica wrote here. And the Americans, Asia, Europe, every country, right? If Australia is meant to be the envy of the world, we're going to see them fly over. What's it going to do to prizes? We were having a laugh beforehand because a shipment came today of copper. Literally, my staff were like, fuck, these things are heavy. We've got tens of kilos of copper that got delivered in us. Copper is very cheap, but they're like, why did you buy that for? I was like, because I had a little game to play with some accumulation of something. And copper, you're going to need it for the wiring, you're going to need it for everything. So, these markets that are going to pop up, like immigration is going to be massive.
Yeah, look, and I think those are some of the levers, thankfully in Australia, we do have to be able to pull to ensure that if the rest of the world has continued at the moment, obviously the globe is going through a massive second, third, fourth, fifth wave, whatever it might be, and it's difficult over there. So people will be coming across to Australia, people will be coming back, people will camp out. As you have a globalized workforce as well, you can work for a UK company and live in, wherever, mermaid waters, right? So it really depends on which side of the scale you sit. And I think Nathan taught me one particularly good thing is that the amount of properties you control into any upswing or downswing is the key factor, right? So if you have assets, you have the options to do something. If you've got nothing, and we actually had an interesting client call today where lovely chap, but there was a lot of perfection paralysis, right? What should I buy? How should I buy? What name? When? What timing? Can I get this? Can I get that? And he sort of structured himself out of actually purchasing anything, and the market's run away. So he's even more sort of upset with himself that he hasn't actually picked up anything. So one of the key things that you need to do is that you need to put everything into perspective, number one. Number two is you need to have some sort of plan in place, right? So just like the government issues their budget every single year, we should be doing the same, right? So whether you're speaking to your accountant, your advisors, the Nathans of the world, you should having a plan and going for it every year. And Nathan's the first person at the start of the year. He goes, Reid, what are the goals this year for you personally and the businesses? What we're going to do? And sometimes you feel like, is it got to do it again? But it is useful, right? And it's just what the government does, right? They prepare a budget, they work towards certain things, and you will see that probably in 4 to 6 weeks' time, I think this budget will be underwhelming, right?
Yeah.
I think the budget will be underwhelming in the sense that not much will be given, and they think we're out of the recession, or they predict that we're going to get out of the recession based on property prices. Unemployment is now back sort of south of 6%, which popped up to 7.5%. But are those trading conditions, are those same parameters true now, given what's changed? To your point, the debt that's been issued, the amount of money that we have to pay back, the way global interest rates are, they can't really afford. There's a whole section dedicated just on interest repayments now, on how much and how globalized interest rates and how they're going to pay back this debt, how it's going to happen. So they'll have to pull back some money. So Nathan, if they pull back the money, what happens?
If they pull back the money, they could wind back lending regulation. They could make it tougher to get the debt. My thought is that they will, the other one is that they'll put up interest rates, right? That's a lever that they've got. I think there's probably like a couple of % chance that interest rates may go up by 0.25% twice. It won't go up by more than 0.25%, but it could happen twice. And I don't see it on the radar, but they could try that. And it happened, Jerome Powell did in the US with the Federal Reserve. and they tried to increase rates. They took a monetary policy, which was of quantitative easing, which is where we're at the moment, and they tried to turn it to quantitative tightening, which is what they did until, surprise, surprise, the scandemic had occurred. And we started to see tightening, and it happened very briefly, and it blew up the market. That's what happened in 2019. Market collapsed, and they had to reverse cycle. If they just go, oh, we're a heap of money, well, then it's going to be very obvious that they're screwed. So they go, we've got to set virus, and we've got to do it. And no one questioned them. Just printed $1 trillion. I don't even know anymore, right? Yeah, pretty well, but 100 billion,
trillion in 2024.
So I remember vividly, like we had a laugh once, like really big laugh, because we had some people talking about their flower shop pals, and they always talk, when the shoe shiner polishes your shoes. Unfortunately, I don't have shoe shiners, but I don't even have shoes. But when these people talk, we'll talk about some florist was talking to one of our pals, and he said that oh, there won't be a crash forever, and et cetera, et cetera. And I laughed and I said to Rid, we're going to see interest rates at zero. And Rid was like, I don't know, it sounds an interesting topic. Rid's very conservative, but I could see that happening, but I think it'll be somewhere in the middle. And this person's like, no, it's going to be great, or whatever. I was like, you're kidding yourself. And I said something very clearly, and you always bring it up, that debt will become the asset. Debt is the asset today.
Yeah, absolutely. It's the income stream, right?
It's the asset. So people with debt are doing really well out of this market because they're carrying bigger cargo loads of assets through this cycle. And this is amazing. Amazing. Someone said,
actually, Matthew Blunt, who I've met, and we should catch up again. What about all these companies that have been relying on JobKeeper? There was actually a really good podcast dedicated to this. I can't remember who did it, but I can get it to the girls and they can put it in the notes. So there is a really strong underlying sentiment that JobKeeper has helped. It was a fantastic stimulus package.
of course it has. It's free money for everything.
So,
but I get a tattoo saying JobKeeper around my neck, because I don't know tattoos, everybody, but I think I'll get one. It's so great. No, I'm joking.
You've already got the mullet.
I've got the mullet, right.
So there's a strong sentiment saying that there's a couple of things happening. One is that employees are actually stuck to their employers because of JobKeeper, so they're getting either extra cash flow or they've got a job locked in. So there's no real competitive movement between companies and where employees should be and pricing them accordingly. And number two is, to Matt's point, is that a lot of businesses which are surviving on JobKeeper, as soon as that ends, they either have to shed all their staff, which means they can't put the throughput out, and or they shut down, right? And if they shut down, what happens is that all the small businesses which power Australia, they start to pull away the receipts from tax drops. So their receipts problem was simplified, right? So what do they have to do? They have to print, or they have to give more stimulus to be able to keep pushing along the line.
And that's that. When you ask, like, what would be the cause of wind back, I've got a bit on a tangent about interest rates. That is probably one of the levers of government stimulus. We're going to see more and more money or currency creation and manipulation here from them just printing out more of these, sort of fix-it sort of packages. We talked. I never would have thought they'd call it JobKeeper or Job Seeker or whatever they call it.
Job Maker.
Or Job Maker. I actually said years ago, we did the mentoring program. For those of you that have watched the mentoring or were a part of the mentoring, you would have remembered me saying, if you haven't watched it, I think it's like available as evergreen sort of content. But it's good to sort of, I had some staff recently that watched it and they're like, shit, you were talking about this stuff before it happened. It's like weird looking at it that's already happened. But UBI, Universal Basic Income, when I said it, people thought I had STD. When I said, oh, we'll get it a UBI, it's like, well, you should go see your doctor for it. I was like, no, the Universal Basic Income, everybody will be getting Centrelink. And these stimulus packages and these grants and these bonuses, all that sort of stuff, are purely off balance sheet ledgers for the government. They can say unemployment's so high. No, they're on Job Seeker. That's not unemployment. They're on JobKeeper. That's not unemployment. So it's ways for them to be able to manipulate the numbers and the facts out there and all that sort of stuff. And recently on my trip, I was thinking about grants that are out there. So lots of grants that have existed throughout all these years. And I thought, people think McDonald's is a real estate industry, right? They have a real estate business. Macca's isn't a real estate business. They do, like they make a burger, they sell franchises, they collect the real estate, but they've also got, grants coming through for education of children, right? They've got grants coming through for looking after people with disabilities. There's grants galore out there that no one realizes exist. And really, like, the world is based from off-balance sheet transfers, because if it wasn't someone getting employed from McDonald's, then they would be on some sort of disability pension or whatever. So it's like, no, we can show that there's more people working, and then we just put a bit of money over here. The world is going to get on more and more of these grants and stimulus packages, and it's uncontrollable now. They can't control this, they can't contain it, they can't fix it, they just have to keep printing until the whole economy falls off a cliff. Maybe you don't agree with that.
No, it's not that you don't agree. I mean, in terms, again, I am more conservative in the sense that I think that all those things combined historically, how governments maneuver and operate within economies. But to some points you've got there is that once you give, it's hard to take back, right? Yeah. So once you give a grant, once you give disability, once you give support or welfare payments, they're very difficult to get back. You end up with hardcore unemployed, cyclical unemployed people, and we haven't seen the fallout from that yet. So for me, I think, obviously whilst IMF and the rest of the economic community have premise in saying that changes occurred within our economy as of right now, the long-term effects of those, and to their fairness to them, they said there's still a long and protracted way to go. But to have that positive messaging saying that we're out of the woods or significantly improved, etc., I think is messaging to ensure that people don't get necessarily upset or disheartened by it. But at the same time, I think there needs to be some realism, right? So you need to take steps in order to make sure that you have protected yourself. If all that stimulus comes, it's great. Everyone's benefited from it. Unfortunately, we didn't get as much as a lot of the big corporates did. They're not handing it back, but all that stimulus benefits us, right? And theoretically the population. So it is one of those things where you need to consider how to then fashion the entire little world of your economy, your little budget, and your investment profile to ensure that you can survive without it, right? So I think it was you the other day, you said that it isn't going to be amazing when the whole economy collapses and I'm going to have X hundreds of thousands of dollars in rental income, right?
Yeah, that's right.
And
but there'll be a problem on the other side too. So
that's motel income, sorry.
Oh yeah,
right. So you don't just look at a car crash. You jump on the brakes, right? And you avoid it, and you go around and you do something. So if you do feel like that's the case, then let's see what happens in the budget. And I think you'll find that there's going to be a redacted amount of spending, and it's going to be more of a conservative budget. They're going to try to bring it back, but I think like interest rates, I think it's going to be for long, right? I think it's going to be something which
do you have a pen on you?
I don't actually.
That's all right, don't worry about it. I actually did it years ago. I drew this little chart, but I think that we're going to see recessions, right? They go, oh, this recession will take 10 years or 7 years or whatever for a cycle. It goes up and down and up again. I actually said many years ago that we would see recessions that would last like a year or two. They would go up and then they would come down.
I remember you saying that. Yeah.
And it just comes down to the amount of supportive stimulus that's needed there. That they're going to keep having to prop this up, but they can't keep propping it up. Like if a chart is going like this and it goes like this and goes like this, you can keep pushing this up. But once it's like this level, it's like it just takes off. So the amount of support that I do believe that we're going to see them try and retract the stimulus measures, but it's never going to last. They're going to have to print even more. Yeah. The stimulus package from the GFD, which is the global financial depression which we're entered into it in 2018, the 10th of October actually 2018, when we really officially went into this cycle. It's very different, the amount of stimulus checks they've put in this cycle than what they did back in the GFC back in 2008.
So they actually commented on that. It's actually, we've done 3 times the amount.
Yeah, 3 times. But that's only what they're reporting on. Yeah. Right? Well, we know that's manipulated because we didn't have $1 trillion of debt back then.
Yeah, absolutely. So in terms of the quantum of how it's 3 times, the magnitude of the order of the problem now is massively increased, right? Like to such an extent where you do have $1 trillion on the balance sheet not showing up well. So I'll quickly run through what the government priorities are, what you'll probably see in terms of a lot of the messaging in the budget. I'll run through it. So number one is COVID health response, which Nathan obviously is not a huge fan of. Vaccine rollout. So the vaccine rollout is obviously going to be something extremely important for quote unquote the economy in the world to get back on track. I don't think my personal prediction is I don't think it's going to be the fix all it is, because people still have a lot of I think caution and a little bit of a tentative measure to be able to actually go overseas and do everything like that. I was thinking about myself, would I go to Bali now if everyone's vaccinated? Maybe not, right?
But you can't vaccinate the debt bill that we've got. You can't.
Well, it's costing them $1.5 billion to actually
It's right on the
so they want to actually do support for the local Pacific Islands and our little Southeast Asian countries around us. Quarantine arrangements. So Nathan might be receiving a knock or a phone call from the government or the local council to say, hey, can we utilise one of your motels to be able to do quarantining in? So there's about $100 million being spent to quarantine and return Australians back, which is good. Aged care is going to be a massive piece in this budget because we had the Royal Commission come out, which was an absolute travesty. I'm not sure if anyone's read it. It's horrifyingly long. I haven't read it either, but I've read snippets of it. So basically, they're going to have to double down. We've got an aging population. That population is probably sitting on a lot of cash and a lot of equity. You probably find over the long-term period there's going to be some change to have some sort of inheritance tax in a long period from now, but that certainly will happen to be able to fund all these things.
So just on that front, estate planning is very important.
Extremely important, yeah, extremely important. So I think it was, I think I sent you a text, do you remember? Where yeah, it was. So it was actually a case where I think it was one of the trustees for a particular estate was found in breach in terms of how they actually administered the affairs of the estate. So they basically racked up too much bills. Oh, that's it. That's what it was. It was that movie on Amazon Prime saying "I Care a Lot." Do you remember I told you? So basically, it was a movie where the lady is an estate manager, and her whole premise is to get people
to watch something.
Yeah. And it was a very similar case that happened at the time. So estate planning is extremely important. The short of it is if you don't have a will, there's a dispute over your estate or there's some ambiguity of your estate, it gets handed over to a trustee, and then they start to essentially pull it apart to be able to fund aspects of your life. If you have to go, for example, to an aged care home, they might say your home, or if you need to get care or legal representation, they'll sell parts of your asset base to be able to fund that, and they have no other option, they just sell it, so you might lose a lot. So there's obviously going to be a critical response to the aviation sector. So Qantas, Jetstar, the works, they're all going to get cash. There's a home builder, obviously, which was extended to 31st of March 2021. There is essentially a push by, I've got from here, the REIA has made a sort of a pre-budget submission. I was going to get Nathan's response on it, where all these building, trade, home, property-related stimuluses should either expand or continue in perpetuity, right? So things like first home loan deposit should be opened up to all first home owners, depending on, regardless of income and regardless of property size, etc., etc. They're saying that. Extend the first home super saver scheme to allow retrospective superannuation to be pulled out.
Scheme or scam?
Scheme.
Oh. It's all
Super's not a scam.
All things are scam.
So change aspects of the home builder where basically you didn't have to spend 150 grand, bring that amount down, so then the government will give you some money for that. And then change, have an extension of JobKeeper and JobSeeker to be specific for property and trades in there.
This beast of a property market, right? Let's keep it very centric to property. This is too far needed. Like, this is too big of a scam, right? The whole monetary system is a scam. The amount of money that they print is a scam. This is a big Ponzi bubble, right? And it's not just the property market. People go, oh, the property market's in a bubble or whatever. It's in a bubble. Like, it's in a bubble because they've created it. But they can't let it go, because if they let it go, it'll blow up everything else. The whole economy is based on property. If the property market turns to crap, then we've got no trades building. So all the tradies are out of work. and then now they're on the unemployment line. So let's just build up stimulus packages to push up for those trades. So if you're my answer to what do I think about these things, I think they're going to have to keep creating more of them. Every time the market's gone up, it's just created another scheme, scam or whatever you want to call it, right? First homeowner grants, lower deposits. Like going back in the old days, you have to put down a 50% deposit. You have to put a suit on and go to the bank and say, hey, can you please give me a loan? You just go on the internet and go, oh, who's going to give me a loan now? You know, best offer, yep, cool. Oh, you give me $1 million, you give me 1.2. Oh, okay, cool. I'll take your offer at 1.3 million loan and give me a 1.99% interest rate, and I'll give you a 5% deposit, which will come from the government, from the super and from the government. You know, if the trades, Matt just wrote here, no more shiny new Hiluxes. If there's no tradies in jobs, they're going to be a wash of shitty old Hiluxes that are dinted around with the dog cage in the back that are, for, you're going to remember that one in the future, right? That are going to be sitting there stranded in the street, right? But no, we've got a demand. These tradies are earning some good money. They've got some money for beer. They go to the pub. They pick up a slab. They go and buy a new car. The car salesperson's making commission because all these tradies are coming in. So he goes and buys some furniture. The furniture goes up. The furniture shop guy makes money. He goes spends at the restaurant, and the economy is working. But this is all set up on a Ponzi scheme of property, right? And it's great because if you own the assets, they can't let this fall. The only way they can stop this is by killing our currency, by inflating everything and devaluing the worth of our money. So the worst place, in my opinion, in 2021 to have your money is as money. Like someone said, Nathan would have, I can tell how, Chris wrote, I can tell how excited you are, Nathan. You must be shitting out $100 notes in the current climate. Your enthusiasm is contagious. I don't have any money. I've spent it before I have it. Like Ridhwan constantly, right? He's just constantly, Nathan, don't do that, right? Oh, you've got balls of steel. Like, why are you doing that move? I was like, because the money is worthless. I don't care. I hate money. I like assets.
That's true.
Like cash flow. I hate money. I never have money.
This is not advice.
None of this is financial advice, right? I'm just crazy girl that mullet on webinar, right? But with it, I hate money. I'm trying to get rid of it before I've even got it. But I know that I've got more cash flow coming through tomorrow. It's all about the cash flow. Keep that cash flow through and spend it, accumulate more assets. There is in all hyperinflation scenarios, all scenarios like this, the really successful people have been able to understand that they collect assets on the way with cash flow that gets inflated. So you've got capital inflating, you've got cash flow inflating, everything's getting inflated away, apart from your debt.
Apart from your wage, and that's the big problem, right? Because they need to keep everything moving to get your wage going. So the last part of the budget, what you probably see this year, is probably a different way, so a different form of stimulus is that they'll issue a lot of infrastructure spend, right?
Yeah.
So one of the most effective ways that China and other countries got out of the GFC, and even in this particular recession, is infrastructure spend. So if you look up any sort of infrastructure spend, haves and have-nots, you'll see that China have a lot of ghost cities where they've got gigantic, huge cities that everyone would be proud of, with no one in them, for effectively future-proofing what would be their economy and their population. You'll see that here. So we've got the rail going in, we've got the rail going up north, we've got a lot of roads coming through that potentially, you know, a lot of people are saying that are not really well deserving of local economies, but other people are saying that's going to help local economies. All it is a different way to feed people stimulus because you're effectively underpinning a portion of the economy. It's not a bad thing. I think Australia's infrastructure is quite outdated, and it might be the case where Australia's population and an economy point of view actually needs to get bigger, like a big Australia, and these are the things which they're presupposing that they are going to do. So that's the kind of budget update that you have, where I think there's going to be a reduction in some stimulus. There's going to be some continuation of some programs. I think there will be some changes to assistance. There'll be some permanent increases in job seeker. There'll be some education and skills development money, but it all is kind of, to Nathan's point, you know, different types of packages which are having to give to continue going on with the economy in the way that they think is tracking, and effectively to keep those rosy outlooks going, they need to keep the economy moving, right? If they were to take it away, it'd be a big problem, which is natural in a recession. So it's not a lack of credit to the government. but it is probably what you're going to see in 4 weeks, 5 weeks time.
I'm about to say something very controversial, Rid.
I'll keep my distance then.
We're all tax slaves, right? We tax slaves, just like Neo in the Matrix, right? Like you're a slave, Neo. You've been born into this bond system. You go to school, you become a tax slave. They teach you not to have creative thinking. They teach you how to obey, not to question. If you step out of line, you get hit. And that's the system that we live in. The only way for us to get out of this mess, right? Rid was talking beforehand about paying down the debts and how can we get on top of things, how can we get that extra cash coming through to make up for these losses that we've had. We are all tax slaves, so I'm being very clear on saying we're all tax slaves, because sometimes people say I'm racist for this comment. We need to import more tax slaves. We cannot breed quick enough to create more tax slaves, right? In the early 2000s, they sort of projected this, so let's give everyone a baby bonus, let's give them this package to have a child and procreate. We can't do that quick enough to pay off this debt, right?
Yeah, that's true.
One of the biggest things that we're going to have to do is bring in tax slaves, right? No matter where they're from, they're a tax slave. We're all tax slaves in this system. We're paying tax, we're slaves to it. So for us to fix up this Ponzi scheme that we've got going on as a currency, we've got a large country, we've got a large place where we can house more and more tax slaves, and people want to come here, like from everywhere. It doesn't matter from the US, from America, USSA, right? It's like, back in the Soviets. You've got USSR, but USSA, because they're basically commies there too. It doesn't matter which country they're coming from. We've got an attractive place for them to come to. So, if we want to migrate and get migration, it's going to be great. We're naturally going to get it. So if we need to bring in more tax slaves, we don't have enough infrastructure for that. So we can just keep printing more money to print more infrastructure, bring in more slaves that pay for that debt. We just keep growing our asset base, just like anyone with their property portfolio. Instead of the asset being the property, is that the controlling powers to be, or I'm not even going to say the government is the controlling power. They're going to just get more assets, which on their asset sheet is more people. We need more human capital as their asset. So as a nation, we can't breed organically enough. We just immigration, import new ones. That's what we're going to need to do. So
I'm pro immigration, so bring it on.
If it wasn't for that, we wouldn't have Ridhwan here.
All right, so let's get on to some property stuff. So I hope everyone had a bit of a good session on the budget and heard Nathan and his views on it. Yeah, sorry. So property tax. I think there's a.
No, that's what we just were. That's just what we worked backwards. So we just.
Oh, correct. Yeah, you're right. Sorry, I apologize. Yes.
Do we want to talk about new dwellings? Or?
We do want to talk about new dwellings. So new dwellings are really important to consider. Obviously, there's new dwellings going up everywhere. A lot of your clients are doing new dwellings. A lot of people just generally in the property space. Everyone's a developer in a boom, right? That's what I've noticed. Right?
Everyone's an expert.
Everyone's an expert in a boom.
Yeah, local florist will be an expert.
So there are a couple of things, and I've always hashed on this. I think I did this in 2016. The one we did at the Mantra in Parramatta, right? That was the first time I brought it up, and that was, a fair way before what was being.
Did actually.
Yeah, do you remember that? Yeah.
We actually had the film crew there for Sunday night.
We did. Yeah, absolutely.
I had a suit.
Yeah,
I fit my suit
with thongs, man. So basically, what the government did, or the ATO realised, is that people are making quite a lot of money out of property, right? So property being effectively a commodity product, whatever you want to call it, that is saleable, they wanted to hand in it effectively, right? So there was a change, not a change, it was probably a more focused look at the GST legislation, and there's various legislation bits that refer to it, but effectively residential property is generally exempt from GST, except when it's a newly constructed, newly renovated, or potentially like a product like a home and land package, which is sold on to an individual. Now, typically speaking, this is aimed at developers, like in the background there, you've got units, villas, those type of things, small villages, retirement villages as well, where they sell them on market and they sell them, they lease them, do whatever it is. They need to pay GST back to the government. Now the GST obligation is all the way down to someone like me. So if I buy a block of land, build a house, sell it, I need to be then in a position where I remit the GST back to the government. Now, it's extremely, extremely, extremely important you do it correctly. You have an accountant who's on top of how it works, whether using margin scheme, whether using GST in full, whatever it might be. And now they're using the change in actually the conveyancing laws so that the solicitors are now having to ask this question. And I think I said that.
Yeah.
I remember
It was
that.
actually when they went fully digital. I think it was the year after they went fully digital.
They do PEXA.
PEXA.
Yeah.
And they basically track and trace you digitally anyway.
Yeah.
So they need your full ID. They need to,
I think I did a webinar with Steve, and I was saying that I think they're going to put it through the lawyers because otherwise people are just skipping out on it. So now every time you sign a contract, doesn't matter old, good, bad, or ugly, you have to declare whether or not there's GST payable on that sale, and effectively a solicitor will hold up to 7% potentially of what is the sale, and they will then remit it to the government, and we need to do a reconciliation to be able to get that money back for you. So it is really important because what we've worked out is between 4 and 6% of the net sale goes out in GST, and if you're doing a house which is 600,000, 700,000, $1 million, it's a pretty significant amount. So if you don't do it right, you can lose out more than that 6%. And if you do it wrong, then they'll come back and they'll tag you for it, right? So it is really important that you understand how the GST works, and it means that things on the inputs that you have. So, for example, if you were to, do a buy and build through Nathan, if that were to happen, then there's on that particular property, maybe you can claim back the GST or a portion of it for his BA fee, your legal fees, the build costs, or the driveways, all that type of stuff. So that's where that net 4 to 6% comes out of. And it's always important to work out, especially doing a duplex. You might be holding one, buying one, holding one, selling one, and there's a whole bunch of different reasons why you need to be careful with it. And there's a few GST traps, which unfortunately people get stuck into when they're purchasing. So they might purchase a semi-constructed or a partly constructed development site, and people think it's amazing, but the problem is they buy it, and then when they sell it, they don't get to claim it in the GST on the way in when they purchased it, because they may have bought it on a going concern basis, and they have to pay all this GST on the way out, so they lose a lot of money. So if you don't have an accountant who's well versed in it, obviously we can sort you out, we can assist with you in that regard. But if you do have an accountant who's really well versed in it, just run by all the questions you have in terms of new dwellings and GST with them. But it is really important, and the tax office is not letting it go. And this is back in 2016 we started talking about it.
So basically, how I see it, and I'm not the tax guy here, but how I see it personally as an investor, as a human being, is that this is we're born into an extortion racket, right? We're born into a place where if you don't pay up, then we're sent into a cage, right? Which isn't the greatest system, but you want to try and avoid that from happening. And most accountants sit there and go, oh, we'll give you a little tax return, all that sort of stuff. You need to make sure that you've got someone that understands this to ensure that you do the right thing, but you don't lose your wallet and your rings and watches on the way through. So we don't want to get rolled from the government for anything we should have. So you need to have the right structuring, the right team around you to protect you. So I look at you as a security guard to my wealth to make sure that I don't get robbed.
We do everything right, Nathan.
Exactly. And that's the thing, right? When I laugh, I have so much joy from it, because I'm like, I just understand the system, I understand the game that's here, and you've got to do it right. Because some people, I was thinking about this recently, right? You know, those people try and avoid taxes, right? You've got those people that are like, oh, I want to do a cashy. You've got a tradie that wants to do a cashy. If someone rocks up to your house and go, I'll paint your house for you, and like, cheaper for cash, right? Everybody that deals with cash is poor. They're not wealthy people. You don't find wealthy people that are doing cashy.
Yeah, absolutely.
Right?
I can't agree more.
So I'm not a poor person who wants to go and go, I want to get the cheapest, I want to do a cashy. Well, no one's going to do a cashy, right? I understand, okay, well, this is what we're working with. How do we be smart about it? So it's important to be smart, but never do shit that's going to throw in the cage. So, yeah.
Also, to your point, is that you can't onboard assets, debt, without showing an income.
Exactly.
Right? So cash can help you to get maybe a little bit further ahead. And I will tell this, and you probably heard it if you listened to us before, is that if your income is 100 grand, you're getting taxed 24 grand, 25 grand a year. 200 grand, you might be getting taxed $60,000, $70,000 a year. If I gave you all that money back, you only have 200 grand.
With 25 grand, it's not going to do shit.
Not going to do much for you, right? You're going to spend it, you're going to buy whatever, $18 burgers, whatever it is, right? It's not going to get you that much closer to retirement. But
Beers
the clients,
Beers and pokies.
the client, you know, might be on pokies. The clients who we see who pay their fair share of tax, and you know, I'm not saying that you should pay overs. I think that everyone should pay the exact amount of tax they should be entitled to get in terms of deductions and whatnot, but not being tax paralytic either, where I can't make a decision because of my tax profile. But using that, if you are going to pay tax, then use it to your advantage. Buy assets, right? The equity that Nathan pulls out of his properties is untaxed, right? He's paying a small speeding ticket of 4 or 3%, but that's about it, right? So
but you've got cash flow too.
You got cash flow, right? So there's a lot of things that you need to be able to work in with the system that you've got, regardless of your view. Tax is an obligation, and that obligation, if you're going to pay it, use it to your advantage. You know, go out, get assets, get different types of assets, whether you take debt on, not take debt on. It's the only way you can get it. You can't even set up, for example, you know, an account now without, you know, some form of, you know, if you want to do, like, say, for example, share trading with your self-managed super, right? You have to have tax returns, you have to have financial statements, you know, you have to show some financial literacy to be able to do those type of things, right?
And thinking about, like, I always say, yeah, I hate the banks. I hate the banking system. I hate the tax system, right? But if it wasn't for the banks, they wouldn't have given me 20 mil,
yeah,
right? And I've got like 18 mil debt. They've actually all gone to principal interest now. All my loans are principal interest. Good luck, right? But the thing is that, like, if it wasn't for the banks, it wouldn't have given me 20 mil. I wouldn't have 100 mil worth of asset.
Yeah, absolutely. Using it to your advantage.
If it wasn't for the central banks manipulating currency, we wouldn't have an economy. We wouldn't have this video camera recording us. We wouldn't have our nice glossy phones or whatever we're watching it from. So understand the parameters of the matrix, and you can be like Neo in the matrix, right? Instead of living in the slums and, you know, on the other side, which everyone's eating porridge and stuff. You know, understand how it works and be the best at your game. The people, when you said about, save 25 grand in tax, people working out how to save $5 per week on interest rate. Someone's working out how to save 20 grand. Like, 20 grand ain't going to make you happy. Like, no money's going to make you happy. Like, not going to work might make you happy. Being able to take care of your children might make you happy. Going on holidays might make you happy. All those things that it provides might. But if you ask me, my opinion, if I had to pay 20 grand, right, this is the cost of doing business,
yeah,
right? But I'd rather pay the 20 grand tax and go get myself $1 million loan and have an asset worth an asset base worth an extra $1 million, and be able to use that asset to go and do other cool shit. So people often ask me on map sessions, when I do map sessions, oh, you know, how do I pay down the debt? And it's like, well, first and foremost, I'm not a financial advisor, so I can't give that advice. But you know, as laymen, and we're down at the pub having a few drinks, and neither of us drink. But if we were down at the pub having this conversation, I'd always look at it and think, if I had $1 million worth of loan and $1 million property, I could work really fucking hard, earn $1 million, lose 30% of it to an extortion racket. So I've really only got 700, so I've got to go back to work and open that treadmill of life that we get stuck in, and then earn $1.5 million to get $1 million net, and then pay it off. And I might save myself $30,000 a year at an interest rate of 3%. But at the same time, if I had $1 million drop in my bank account today, I could go on, just on the simplest form without getting any debt leverage or any more debt, just go and purchase the same. If the market doubled with that $1 million property, it would turn from 1 mil to 2 mil. But I'd rather take that $1 million and go buy another $1 million worth of asset, and then you've got $2 million worth of asset. If the market doubled, it would turn from 1 mil to 2 mil, from 2 mil to 4 mil. So it'd be net 3 mil better off, and 2 mil after that. But with that cash flow, if you're paying 33% over here or 30 grand a year, I'd rather buy an asset that's going to give me 7%, give me 70 grand in, put 40 grand of that in my pocket, and then 30 grand to pay off the mortgage over here and service the debt. I'd rather have a bigger asset base than try and pay that off, because the tax is going to screw you. So understanding how that debt works, just like the government does for their budget, is crucial. And having an accountant that looks at all those vantage points, not many are out there like that. So that's why we get John and work with him.
All right, so deductions you can consider. So most of us know all the ins and outs and the novelties of what you can consider in terms of deductions. So for a property, the usual things, council rates, water rates, property management fees, interest on your mortgage, insurances, strata, depending on what type of strata, you might have some special levies which might get you some deductions. You might have property maintenance fees, gardening, those type of things, repairs and maintenance, replacement of damaged goods. All those things are the ins and outs of a property, which you should be 100% across. And if you're not across them, make sure you get across them. Because what happens at tax time is that we get a lot of clients who we're speaking to and we just run through, a basic checklist of like that, and they go, oh, I actually remember that. So at tax time, if you're remembering that, and what have you missed out throughout the year, right? Be diligent, use a tracking tool, do something, get your property manager to pay for everything. That's what I do actually. So for example, the properties that I have, and I get clients, and I have my clients who, or our clients who work with, I say, get the property manager to pay council, water, strata, insurance, repairs, maintenance, everything they're doing. Get them to, they're charging a fee anyway, right? Get them to do it. So when you come and see me, what you need to bring? The income and expenditure report.
Yeah.
Your loan interest. Yeah. And maybe a depreciation report. So 2 documents. Because if you were trying to manage 5 properties or 10 properties with 4 strata, 4 council, you'd be like Nathan and you go crazy and you'd have someone employed doing it full time for you.
I always think about it, right? People go, should I pay my own bills? I think about it, right? Like, let's just say 200. I've done some recent figures, it's more than that, but the motels and all that stuff, but let's just call it that. Let's say 200 properties, and let's say that I've got to pay a quarterly basis. Council, water, strata, insurance, just say 4. That's 800 transactions I have to do. If it takes me, and then times that by 4 times in the year that I have to do that, so it's 800, 3,200. Thanks, Red. I'll do even calculate it. I've got the account at the side. So 3,200 minutes that it would take me. Divide it by 60 minutes in an hour. Tell me that one. I'd be literally sitting there for like about 50 hours. About 50 hours. That would be 50 hours. I'd be sitting there doing bills per year. That's like.
It's a nightmare.
It's a nightmare.
Yeah.
Like, get your property manager to do it.
Get your property manager to do it. If they don't do it well and they're paying bills late and whatnot, change your property manager.
Send them the blink property.
And if they're not giving you up-to-date information about repairs, maintenance, all those type of things, make sure you're on top of it, because what ends up happening is it costs you more down the track, right? There's some other deductions that I always get phone calls about, and I always have to talk to clients about: prepaid interest, prepaid expenses. So prepaid interest and prepaid expenses have limitations. So you can't prepay, for example, 12 months worth of your interest up front in one financial year. You can do certain elements of it. There's ways in which you can structure it. There are some companies out there who give you money and then you can pay their fee, and you do all these weird wonderful things to be able to get the prepaid interest across the line. But things which are easy, to be honest with you can prepay, for example, some strata bills. You can prepay some insurance bills because it's not more than 12 months. You can prepay some portion of your interest, but don't go off and pay 12, 24 months of interest in one go. Hang on to your cash flow. Offset is probably a little bit more useful for you. So try and keep all your, I guess, out of the box deductions, ones that you run by your accountants. Try and make sure that you know how your properties are going on a year-to-year cash flow and tax basis. So what we do for clients is at the end of the year, we actually go through and do a cash flow and tax review to see how those properties are performing. So if Nathan buys you 3 or 4 properties and 2 are meant to be cash flow positive and 2 are meant to be equity access properties, you need to know that, right? You can't just sit at the end of the year and go, okay, cool, I've got 3 grand, I'm going to go buy burgers, right? So it's one of those things where if you're not on top of it, you don't know your deductions, you don't know what's coming in over the top. I think it was you that called me saying that a couple of your clients just ended up calling up Blink, or Blink called them. I think I can't remember what it was, or the agent called them, and the rental jumped like $80. It was crazy.
So every day, I actually had the team build a flyer, and every time the flyer gets built, it keeps getting more and more added on. So it looks like a whole lot of like darts are being thrown on the map of Queensland, because all up the coast, all the way from the tip of basically the Cooktown area, all the way down to the Gold Coast, the rents we've been able to push them up like sort of between 50 and about $100 a week. So one of our mates, Kane, he recently had two of his properties. Yeah, two of his properties went up by, one went up by 80 and one went up by 90 bucks a week. I just saw one that settled today, and I saw the person in here before him. I'm pretty sure it was Jerry's property, and it was one of the Gold Coast there, which is settled. We took the property off the on-site manager because they're shit anyway, and then we put up the rent by sort of 80 bucks a week or 70 bucks a week just from doing nothing. So he bought the property. He's getting extra, let's call it 70 bucks a week. 70 bucks times 52 is 3,500 roughly per year. 3,640. Extra cash flow. If you had 10 properties, that's extra 36 grand a year.
Yeah, absolutely. Just takes up $1 million property.
Exactly.
So those are the things that you need to consider. So with deductions, things which you often get called about, if hot water system breaks, if an oven breaks, if something breaks and you have to replace it, you can write it off, right?
What about if you use equity to pay for it?
Yeah, you can use the additional interest spend as part of the deduction profile for the property. So
if you had a big year of income and then you go, okay, I'm going to get some of my equity or whatever, I don't have the physical cash to do it, so I might get some equity,
spend on
the property.
Yeah, absolutely.
And then obviously repairs and maintenance or whatever, not a capital expenditure, you would be able to reduce your tax bill.
Yeah, absolutely. So all the different types of things that you probably could consider, you probably have, which is great, and a lot of clients are very compliant with that. But I really see the clients who do well are the ones who track it, not just with us, and the ones who come back with us and actually sit down at the end of the year and go, everything's actually doing pretty well, right? So it's really important that you do that. And the deductions that you should, if you have it, the ATO has a really good list, to be honest with you, of deductions you can claim, how you can claim them, when you can claim them, what's available to claim. So you can probably point yourself to that to be able to familiarize yourself and ask a question. We've covered prepaid interest, something that is spooked a lot, but just be careful with it. Capital gains and depreciation, a very common question I get. How much is capital gains tax? So for all of you people who, are really on top of your property portfolios, the market's hot. I probably have 5 calls a day now about what should I do with the property? Should I sell? I give investment advice, so I can only tell them what to do in terms of their tax affairs. But often the question is, like I had a client today who said they want to sell their property and they're going to make 600-700 grand. I don't want to waste 350 grand of capital gains tax. And I said, well, you're in luck in the sense that if you've held the property for more than 12 months, your net capital gains tax comes down to approximately 25%. So whatever your net gain is, if you get your loan, everyone gets confused and says, well, I've got ABC loan, and that's what I'm selling it for. The loan is totally irrespective. It's your cost base, what you purchased it for, plus the inputs on top of that cost base, stamp duty, legals, rest of it. And obviously what you sell it for, less selling costs, etc., etc. Things like property staging, property sale fees.
So if you own a property, well, this is where a lot of people get confused, right? So if you were to sell property, and I see that the next slide is another cool topic, and it would apply to whatever asset you've got.
It does.
But if you had a property that you bought for 100 grand and you sold it for 200 grand, you'd make 100 grand profit. Let's say out of that you have 20 grand in and out costs for legal fees, agent fees, whatever. You'd have 80 grand profit. People would normally think you'd pay tax on that 80 grand at 50% or whatever they think in their head, but it doesn't work that way. So if you held the property for more than 12 months, you'd only be paying tax on half of that profit, which would be the 100 grand minus the expenses, being 80 grand left over, be paying tax on 50% of that, which would be 40 grand that you'd be paying tax on. And if your marginal rate is 30% or 40%, then you're paying 30% of that 40 grand as tax. So there is some benefits there for the duration that you hold them. Specifically, I'll tell everyone the next slide is about cryptocurrency like Bitcoin and all that sort of stuff. If you've held that, you do dispose of it, it would be the same.
Absolutely, and timing is important. So if you sell a property in June, tax bill is due in May or the following May. So at 9 months later, for example, if you sell it in July, it's due 18 months later, right? So timing is really important as well. If you're looking to be able to capitalize and be specific with your cash and how it's handled, then again, speak to your advisors and make sure that timing is correct. Depreciation, one I often cover with clients, which they overlook, is that if you've depreciated a decline. You depreciated a property along the way, say 40 or 50 grand over the years, got the tax effect of that back, could be, 20 or 30 grand. When you go to sell that property, effectively, you have to add back the depreciation, either minusing from the cost base or adding it to the actual sale price. The same mechanism occurs. You have to add the depreciation back, so you repay the tax element of that. So depreciation is a double-edged sword, but one that doesn't affect Nathan because he doesn't sell properties, right? So
Not fucking sell.
so if you don't sell properties, the depreciation doesn't affect you. But if you do sell properties and you have claimed depreciation, it is something that you can consider. A really overlooked component of depreciation, everyone thinks it's just your depreciation report that you get from your depreciation report companies. Scrapping. Have you ever seen a scrapping report?
I haven't, but I've thought about the amount of scrapping that we've had to do in the offices, the scrapping that we've had to do of said properties and whatnot, and I've never actually had a scrapper report.
So it's something that the depreciation report companies are doing, particularly after what happened in 2017 where they changed depreciation laws. So scrapping reports are very popular now, where if you were to say, for example, remove, like you did in this office, a whole bunch of fixtures and fittings and plant and equipment, they have a value. So when you get rid of those, you get to write those off, right? And then you get to depreciate the new. So out with the old, in with the new, you get to depreciate on both sides of that coin, right?
I think you get one for this office because that'll be a nice big one.
So it's really important. I had a client who had a really good conversation with me, and they redid a kitchen, and they did a really high-end kitchen, but the old kitchen was actually pretty good. It was a house in Kellyville, and ended up getting a scrapping report for about 36 grand, which was a write-off for them, right? So it really helped them from a taxation point of view.
Would you have to pay that back?
Would you? Yeah. So no, scrapping's on the way out, right?
So if you were to sell the property,
yeah. So
you'd have to pay back the
double-edged sword, yeah. But if you don't sell the property, then it's okay, right? So, but yeah, it is really useful in terms of valuing what you've purchased and not just letting it go to waste effectively.
Yeah.
And the cost of disposal, ripping it out, the whole works gets pulled into that scrapping report.
And I guess the benefits, like that's where it comes down to the planning. And it's why I was saying beforehand, you need someone that's going to be looking at this stuff moving forward. That's got your interest, not just looking at it from a two-dimensional, but you need to look at it from 10 different vantage points and say, okay, well, you could miss out on depreciation, you may have to pay it back later on, etc. The thing is that if you're taking it today and you're on a 40%, 50% income, you could be saving it against that at its full entirety. But by the time you sell the property for your retirement, you're paying 30% off, the tax rates have gone down a lot, you'll be paying tax for sale at that newer tax rate. So in essence, you are taking a shit tax rate from today and you're dumping it in the future when you've got a tax rate on your choice, not from the ATO's choice. So,
well, because also you get the deduction of the 50% discount. Right? So when you add it back, you're getting that discounted as well, right? So usually it's okay to add back depreciation. You still get some. There's still some point left in the end of the pencil. So think about scrapping as well. So one that's commonly overlooked. So this is the one everyone's been waiting for.
Everybody keeps asking about this. So
I get so many questions in this about it. So crypto, what is it? So think of crypto as any other type of asset. Okay. Now it does have some distinctions in terms of what it receives, but how it operates, how it's aggregated, how it's taxed is effectively like shares, effectively like property. It is an evolving space. The tax office is very open about it and actually do like their notes about how crypto works and how they view it and what they think people should be doing and how they should be reporting. The only downside with crypto that you'll find is that because people try and be too smart and go outside of the system, there are foreign exchanges, foreign platforms that you can utilize. I've had many clients lose their crypto because they're on foreign platforms. So in a bid to try and save 25, 30, 40% in tax, they've lost 100% of their asset base, right? So that's a really good live example as to why it's important to deal with entities which are reputable, to declare, to do everything that you're meant to be doing, right? So I'll get the first thing out of the way. When you swap, when you change, when you move currencies from one type to another, whether it's from coin to fiat, coin to coin, anything that you do, only thing that's changed is when you have a split or you have like, for example, a fork, for example, with regard to a currency, or you have a currency being consolidated, for example, there's no tax implications on those two examples, but everything else is taxed accordingly. Every single thing. So when you change from Bitcoin to Ethereum, if you were to do that, or Nathan's hated Ripple to Bitcoin, Ripple for
it's meant to be crippled because it's useless.
then you will pay tax on that. So you value what the coins are worth at that particular disposal date, and you work out how much you've made on those particular transactions. So if you had, for example, one full Bitcoin, which you bought at $3,000 and now it's at $70,000, and you sold 10% of it, we do the math and we work out how much you've made on selling that 10%.
And if you had a coin that you bought for 10 grand worth of coin and it went down to $500 and you were to sell that,
yep,
that would be classed as a capital loss.
Yep.
And if you go buy it back and you haven't realised that profit, there could be the benefit on that front too.
Yep. Yep. So you're crystallising losses at the same time sometimes has a benefit similar to crystallising gains. Obviously you get the cash, but a lot of people during the 2017 lull crystallise all their losses, right?
Yeah.
Is the net effect, is it useful? Yes, it is. I mean, because they're all dropped and then they've all gone back up, so the net position they may not have made, but they had losses that they could then implement if they wanted to hold on to coins, etc., etc. So very common strategy where you crystallize losses, buy back in, you get a bigger cost base because you paid at a higher price, obviously, so you get a pretty large capital loss sitting around.
Tell me, with like a few years ago, they changed the law that, or the view that Bitcoin, for example, is an actual currency. Is that correct? Or it's like,
it is a currency, yes, it's treated as a currency.
Okay.
Yeah.
So if I was to have $10 in Aussie dollars and then go and buy a half a hamburger for $20, I wouldn't pay tax on that transaction. No,
you wouldn't. You're absolutely right.
Yeah.
Yes.
So if I was to buy a Bitcoin for 3,000 and it was to be worth 80,000, right? And I was to buy something with that Bitcoin without buying physical fiat currency, if I was to purchase something with it, would I have to pay tax on that occasion because it's classed as a currency?
Yeah, very good question, Nate. So the tax office addresses that in full, and it's called personal use exemption, right? So if you have a personal use for any cryptocurrency effectively, potentially a really speculative currency probably wouldn't fall into that ambit, but a mainstream or some sort of type of coin which is relatively stable, you might be able to use. So effectively what that means is that so long as they cannot determine that you're actually doing this for investment purposes is where you get a personal exemption. So what that would typically denote is that you might have an investing platform or wallet in which you hold your currencies and you do your currency trading there. But then you also have a personal use wallet where, for example, someone says, hey, Nathan accepts Bitcoin for his BA, I'm going to pay in Bitcoin. And if you bought that Bitcoin at 3,000 and now it's 80,000, you only have to peel off 13 grand of that to give it to you, and that's considered an acceptable use under a personal asset point of view.
So if someone was to say, for example, buy $100 worth of, what's that shit coin that I bought the other day?
Warriors.
Yeah, some coins that I picked up like a couple of months ago for $100, they went to like $5 grand in like a month or whatever. We're laughing about it. So if someone had bought, say, $100 worth of Wink or whatever it is, or $100 worth of was the X or whatever it is, and it's worth $5 grand today, right? If they were to sell it, they would have to pay tax on that $4,900. Yeah. But if they had bought it to use it as a currency, because that's what they bought it with the intention for, then they were to pay for a service like pay for a buyer's agency fee and go, here's $5,000, then that would in effect mean that they wouldn't have to pay tax because they bought it as a currency to use.
So if the utility is for buying and selling,
yeah, goods,
services, then yeah, theoretically yes. Now in your example, Wink and Wazzy are very speculative coins. So it'd be very unlikely to convince the tax office you didn't do it for speculation. But
someone was India because it's an Indian coin and they were to buy it, so they want to use it to transact and back it.
Potentially, yeah. Well, potentially you can make that argument. Bitcoin, Ethereum, whatever other stable-ish coins there are which are accepted more from a more mainstream point of view. I think there would be an argument that you could have, and you could say this is a personal use asset.
Yeah.
You have a separate wallet you've got transaction histories that you're paying. I think it's a while pair. They for a while they're accepting Bitcoin, right? So it's one of those things where you need to just have the record keeping purposes there. Which platform is saved to my crypto? I want to answer that. So,
yeah. But no, I was going to say, so for those of you that are in crypto, like we do accept cryptocurrency. Someone just asked, John, you're about to accept crypto as a payment virtue. Well, we do actually accept it. So there's a few platforms that we use to accept cryptocurrency, which would be something like BitPay or any other sort of one. So if you do have cryptocurrency that you bought for the purpose of trading and you decide that you don't want it, and it does have a value if you were to trade fiat currency, you don't want to do that, well then there is a potential that we could accept that cryptocurrency as a payment for your expenses. And someone asked which platform is safe to buy crypto. There's all different platforms out there. We can't give you that advice, but I do know a lot of people use CoinSpot as an on-ramp. You need to firstly trade, like for a beginner. CoinSpot has proven to be very good for a lot of people. I know a lot of people that have used it, but I don't endorse it in any capacity. And yeah, it is a whole weird wacky world out there. There is other platforms such as PayPal, which now accepts crypto, but I don't trust those sort of companies. So I don't trust PayPal with it. That's just my personal view. Looking at the other question here was, if I gift crypto, so I'm assuming that if a child was to get a Bitcoin as a birthday present or something, they bought it in 2010, it was $1, and then they gifted it to the child, would they pay tax on that?
Yeah, good question. Probably not, to be honest with you, no.
Yeah. Danielle asked, do you think at some point the banks will start accepting crypto for home loan deposits? Would that be considered personal use? I would love to see that, Danielle. That would be amazing. But I think that crypto is sort of anti-bank and sort of like against the bank. So it would be, I'm interested to see that PayPal's playing around with it now.
A lot of the big investment banks have moved into it. So, I mean, there will be some form of adoption, whether they would take, in answer to your question, if they started accepting crypto as home loan deposits or repayments, etc., then that would be personal use, because they are personal. They are typically used for day-to-day activities, trading, etc. There's not an investment activity. So it would. So if that ever came to be, then yeah, certainly it would go down that way.
That's why I haven't wanted to sell my crypto. That's why I just keep it.
You told me when you get to a certain amount, you got to sell it.
Oh, we'll sell it. Yeah. When I get a couple of hotels, that sort of stuff.
All right, so two last bits and pieces which clients often ask me about, and they're very valid questions. One is loss or theft of crypto. The tax office has pretty specific parameters in which you can determine if a cryptocurrency has been lost, stolen, or otherwise, and you do need to prove that. In the event that you can't prove it and you are in a position where you're effectively saying it's gone to zero, the tax office may accept that, or they may ask for additional information, which we've gone very blurry, which is why it's always good to keep detailed ledgers of what you do, so transaction histories, keep it on cold storage, understand what all your SID phrases and everything are, so that you can determine with the tax office that it actually has happened. So in the event that you do lose it, sorry to cut you off, and it goes to zero, if it magically reappears again, you get a zero cost base, so you pay tax on the full tilt in the event that you sold it, right? Yeah. So the tax office will allow it, but what they don't want to do is suck that crypto out from purview, and it's it appears somewhere in America, for example, right? So that's the problem.
So if someone came in, right, and this is just, things happen, right? Like I've left a phone on the bus seat, for example, right? Things happen. I've never left the phone at the bus station, but just assuming, I'm thinking of something, people put the phone on the roof of their car and put the shopping in and then it disappears. So if I was to lose my wallet, like you have a crypto wallet and the keys and whatever, if I was to lose it due to theft or something, like, then that would be
considered a capital loss.
capital loss. So if I had $1 million and then it disappeared.
If it reappeared, is where you probably would be, Nathan.
Yeah. I've never lost it.
Never lost it.
I don't even know what half the stuff is there. It's just a good question to ask.
So a couple of quick questions is staking airdrops. So essentially airdrops and staking, if everyone's in crypto probably knows, effectively like an annuity or a DRP or something that you get in relation to having a particular currency. A dividend, yeah, effectively a dividend, or a DRP is probably a better way to look at it. But
people wouldn't know what that is.
Yeah, so a DRP being a dividend reinvestment plan, so where you get the actual share added to your cost base or your holding base, right? So very similar to staking and airdrops, they're considered income, right? So the value of that DRP, the value of that dividend, the value of that airdrop, the value of that chunk they give you is considered income. So that's how it works, right? So there's no way to scoot around that. A lot of clients say to me, look, I'm getting proof of stake and I'm getting all this income here. It's going to some other, because you can send it to a different area, for example. Can I get around it? The answer is no. So I would make sure that you keep all your transaction histories and try to keep all your platforms to one particular platform, whether it's something that you do regularly or something semi-infrequently. Keep all that information for record keeping purposes.
And I think people often say, why doesn't Satoshi Nakamoto, for those of you that are in crypto, if you're not in crypto, it's probably like gibberish. But Satoshi Nakamoto, the person that designed Bitcoin and created this whole space, I actually believe that I've met the bloke, right? He's an Aussie and he doesn't live very long.
Yeah.
And I've had extensive conversations with the bloke. And I often think about, like, why would you not, like, if you were handling this crypto, why wouldn't they just prove by selling off one Bitcoin or moving it just from one wallet to another? And I've often thought about it. I'm thinking, if that wallet was set up to start off with, and it was accessed just for 1 cent of a transaction, 1 Satoshi of a transaction, that would mean that would become liable for tax purposes, right? And all the airdrops were stacked with Bitcoin Cash and Bitcoin SB and all that sort of stuff. So there's just random side thought. It's based on that tax ruling is why I believe that it's never been touched. The crypto has never been moved.
Oh, right, okay. Just sitting there.
Yeah, I believe the person may have also got grants for setting up Bitcoin. That's why you have to leave the country very quickly. Yeah.
So one, I think we spoke about it before, when you get a chain split or a fork, if you do have, those two competing Bitcoin, blockchain changes, then you don't pay tax on that part. So for example, if, let's just make a fictitious Bitcoin, NBC, and then it came to, and that's forked off with BIN, you wouldn't pay tax on that. When you sold either of those two is when you pay tax on it. So
on the whole lot.
On the whole lot, yeah. So
that's why I think crypto's been moved.
Potentially, yeah. So that's a fair point you make. So that's essentially it with crypto. The last part of what the ATO refers to is if you carry on a business with regard to cryptocurrency and/or you're in a business of receipting cryptocurrency, then there's a pretty good argument for you to be considering that your coin is like currency as opposed to an investment profile, but it's a very limited scope of businesses which can probably work in that regard. And at the moment, no real service-based industries are taking or accepting Bitcoin. So to answer Danielle's question, absolutely, we do get some SF tax, one of the biggest things we do. A lot of people own crypto in the SMSF, which is a whole other webinar in and of itself, so be careful with that.
And sorry, I've got a point here as well. So Daniel asked, do you do SMSF tax self-managed super fund? So a lot of people, like Rid, can't give any financial advice. He's an accountant. What's the qualification? I can see.
Okay.
Yeah. So he is able to help from a taxation side, but he can't sort of set up and give financial advice to a super fund. In my personal humble opinion, we've all seen Wolf of Wall Street and what they've done with people's money over the years, and I feel like that's the super fund industry is a big part of that. Super funds are being used for all different things. I think personally, as a person, I like to have mine in a self-managed super fund so I can be my own financial planner, my own financial advisor. But Ridhwan can set up the structure, like not give you the advice around it, but if you were a sophisticated investor and not requiring a financial plan, you could potentially set up a structure being the trust and whatnot, but we cannot give you advice on that. You would need to come to him in order to set that up. Personally, would that be correct?
Yeah, so we can do this sort of secretarial service where we set up the structures for you, action it, and all that type of stuff. Obviously, it is always useful to have a chat with a financial planner, but in the event that you've got already an asset in mind or an asset class or a focused asset that you want to purchase, I had a client today who's purchasing the building that they're in terms of the business they run. So he's already got a purview on the asset that he wants to buy. And he said, look, I'm setting this up. I don't need any advice. Can you set the structures up in a limited execution format? We can just literally, get those structures for you and get you going. But Danielle, we certainly do self-managed super fund tax over 200 funds a year. And that is another specialized space. We have a dedicated team of 3 who just do self-managed super funds, nothing else. They don't do any personal taxes, company taxes, trusts. So it is useful for clients who have that, typically to get advice with regard to that. I myself used to work for Dixon Advisory, which is the largest independent financial self-managed super fund administrator. So I have a fair amount of experience in it. But even then, the guys who work for me only do that, right? So that's all they do. So we can certainly assist if you needed any help. But yeah, look, to Nathan's point, it is one of those things where you need to manage your super because it is an important asset. You're paying away into it 9.5% every week. On a note of that, actually, superannuation concessional cap contributions are going up for 2021 to 27,500 from 25,000. So you get a little bit more of a deduction in place if you were to do that, and a little bit more headroom. So that's useful for a lot of people who are actively in the self-managed super fund space, contributing and trying to get ahead from a property or another asset class point of view. So it is important that you plan for that. And if you are considering self-managed super fund, you can have a chat with one of the guys here, and they can assist you out.
It's above 1300 367 925. I know that off the top of my head, so clearly. So just on a last few notes, I'll see there's a few questions and that we'll get to them shortly. Have you got any tips for everyone about how to plan for your 2021, like some things to consider? Yeah,
look, so obviously with regard to 2021, we're coming to an end pretty quickly. It's over in 2 months in terms of financial year. So the things that we mentioned, previously towards the start or the middle of the webinar, in terms of your record keeping, in terms of prepayment of expenses which you can catch, in terms of timing if you are considering selling anything, now's a critical time to do it. But more critical than all of that is to have a chat with your advisor or your accountant to say, hey, these are the things that I'm doing. Is there anything I can do towards the end of the year? Can I spend some money, for example? Is there something which is broken which I can spend now, which I'll get a big chunk of that back in tax in 3 or 4 months' time that I can engage with now? That's the best way to plan and prepare for your tax. If you do have headroom, for example, you probably can save some tax and consider superannuation salary sacrificing or contribution. If that is something that you've engaged with and you actually have advice on that you can do, those things are important to do because they do take time. So you're in a position where those type of activities can help you plan for 2021 better. A lot of the clients who are on tax variations now start getting your documents together, to be able to get your variation placed. That when it comes June or July, and we send it off to the ATO, it's not a big delay in terms of getting your tax varied, so that you can get a little bit more in your bank each week or each month as you get paid.
Cool. Ryan, yes, I believe you are correct with your comment there. So I believe that you're correct with your comment. Spent be a slide in? Like, how can we guide you? Like, what sort of things offer?
Yeah, look, I think for any clients who are considering getting our help to do the taxation affairs, I want to have a chat. Any clients that are coming through the webinars, existing clients or new clients, feel free to give us a call. We are going to run a special next month when we do the budget update of clients who come in before 30th of June to book their actual tax, which is this one here. So we'll be running that from May onwards. Basically, book your tax for post-July or post-August, depending on when all the systems get updated, and we'll give you 15% off so that you get in early and get a discount. The early bird special is always good for us. So yeah, look, it's going to be a busy year, I think, with a lot of people having spent time doing renos during COVID and everything like that. So people are going to be having a lot more deductions than we expect over this year. Work from home is obviously a big feature for a lot of the people working from home.
A lot of things you potentially claim on your house, where you bought a desk or bought a new computer to run from home.
Absolutely, yeah. So all those type of things are certainly available to you. So we do get pretty busy pretty quickly. So so you don't have to wait too long to get your tax return. If you book in early, you get it all back early.
Ridhwan, when tax season comes 1st of July, the whole team, how many staff in the office? 15 accountants that are full time, just hustling and making sure that everyone's protected.
Myself included.
Yeah, you won't get this guy for like he will not be this chill in 2 months' time or 3 months' time. He will be. You won't be able to contact him. Like, be like, oh man, I'm getting home real late. I can't see the kids. I'm like screwed for time. So yeah, the time leading up, there's a bit of a promo there today. And yeah, as always, like if you guys need help with anything here at B.Invested, I see here that you are like the Costco of real estate. Very smart. I don't know what you mean by the Costco, but I think maybe all we have covers all different areas of the journey. Here at B.Invested, we have access to great people like Ridhwan from an accountancy perspective. We've got lawyers to help you with the wills, and, estate planning, and that sort of stuff. We've got a property management firm where I've founded these businesses where I don't like real estate agents managing my properties and my portfolio. I want to make sure that it's got skilled people too, so it can help you manage the assets, acquiring the assets. I personally do all the acquisitions on behalf of my investors. If you are an active investor, that I go out and locate and negotiate the deals. I just actually went and randomly took videos of about 10 people's properties the other day, all the way up the coast to Cairns and all different places. Yeah, so physically go out there and see them sometimes. So yeah, help you on whatever aspect you need. If you want to speak to Ridhwan, you can get them directly on the links on this description. If you want to get in contact with my team, you can call us at 1300 367 925.
Just Danielle, emails. So I want to know the structure. I want to know. I'll
give you Danielle's details. Danielle's, she knows what she's talking about. So she's very sophisticated, and she's done really well for herself. So congrats, Danielle. And I need to get back to your email I saw the other day. So sorry about that. So a couple of questions. If you have any questions for Red, ask him while we're here. Probably do 5 minutes worth of Q&A and run through some of these questions. So I noticed here, Scott wrote, I agree, you were spending my money before I have it as well. Yeah, it's a story of my life and story of a successful investor is to do the hustle. So infrastructure, I work in a large infrastructure firm. The government has just been throwing money at us and bringing work forward. They are very keen on us to pass it through to our subbies. So obviously they will tax some of the subbies back to try and get money back in tax and all that sort of stuff. So it just needs to trickle through the system. The big problem we're going to see is when we see massive velocity come into this market with all this money creation or currency creation, as it should be called and referred to. That is where we're going to see massive inflation come through. What else we got here question-wise? Saw an article today, people overseas are doing virtual tours of Australia. It's crazy. What about all the zombie companies that have been relying on JobKeeper? We're going to see a lot of these zombie companies implode. That's why I'm not a big fan of buying paper assets, i.e. shares and whatnot. I like having physical assets so I can touch and feel and see. For those of you that say, oh, Bitcoin you can't see and whatnot, it is a decentralized ledger, so you can still have actual access to it. Yeah. You can do this one, Rid.
Yeah, Luke mentioned in his question, New Zealand is now disallowing interest deductions for property investors. Jacinta is under pressure to cool the housing market, though. I don't see it doing much. What are your thoughts on Australia giving this approach consideration here? So I think it's a ludicrous policy. I think if you were to do anything, you would limit the deduction so you can offset what would be your positive geared income. So maybe bring it to zero, not actually disallow the interest completely, because it just goes against all the ethos of being able to claim any deduction with regard to an income generating asset. So I don't think it's well positioned, to be totally honest with you. I think it has a lot of holes in it. You can potentially consider targeting that to particular assets, like saying, for example, interest deductions are only available to, property people who buy new homes, or, investors who have X amount of properties on the 6th or 7th one can't do it. But to have a blanket thing like that, I don't think it's going to work or have a lot of legs going forward.
I think also it's going to be really fun to see this, right? Because there was a guy that was the Premier of New South Wales, Bob Card, remember that guy back in the day? He introduced a tax, which was a sales tax. It was stamp duty on the sale. So if you want to sell the property, you have to pay tax on selling the thing. He was soon kicked out, and people just weren't selling. And what I think we would see, I would love to see them attack negative gearing in some capacity, because two things would happen. One, you would see a massive issue with the rental market. You would see it passed on to the tenants, so the people that they're trying to protect would have higher rents, meaning that you would have higher cash flow. Two, there would always be some sort of way to try and get around that. They couldn't fix all the holes. So what I would see, if it happened here in Australia, I would just simply go, okay, well, they could attack personal properties, but what about if it was a company? That have to mean that you can't claim tax on a company, which they can't claim interest repayments on a company, which would affect every single large corporation around the country. So there could be other ways to get around that. But I think all in all, we'll see this thing get turned around very quickly.
No, I don't see it happening here.
I don't see it happening here at all. Yeah. Plus the market's not hot. There's no investors out there. We need, rental properties. You're going to see an issue with rental properties, just as we're seeing on the Gold Coast at the moment, different markets around. So Perth has got a serious rental demand shortage. Queensland has got a serious rental shortage. When we start seeing the gates open and we start seeing everyone going to Sydney and to Melbourne from overseas, we're going to see a serious rental shortage. They need to print more houses. They need more houses.
That's pretty cool.
Yeah, so it's cool.
I think that's it.
Maybe there could be more down the bottom, maybe. If we have strong inflation, do you think the government might introduce rental controls on landlords? Possibly, anything's possible, but
in COVID they sort of changed the way you can engage with your tenants, keep them out, etc.
Yeah,
so it's possible. Yeah.
Yeah. So if you were to, Sophie.
Hey,
Sophie. There you go. So if we were to see inflation, like people could be kicking out, tenants and all that sort of stuff. You'd see all different things happen. So just remember, this is something very clear I said from the start. People might hate me for that. Good luck. I'm not always going to be liked. I'm not always going to say the nicest thing. I just do what's right. But during Corona, there was no tenants, right, throughout the whole of Blink, not one person. I managed thousands of properties across Australia, and not one person got a rental reduction in that period. No one got put on a rental holiday. No one got a rental reduction at all. Right? Call me a prick, that's fine. But my investors got paid, and in most circumstances, their rents increased 50, 60, 80, $100 a week during that time. So there is ways around it. You need to manage it right, just like any area. And that's the importance of having a great team around you, that you've got, relevant people in this field. So that's where it comes in from, protecting you from a tax perspective. Most people look at it, it's just a bit of tax. It's really important, because the difference between you getting 1, 2, 5, 10, 20 properties is going to come down to finance. If you don't have the right incomes and structures, you're not going to be able to get the right amount of finance to be able to support your goals. So it all plays hand in hand. Sophie's question was, if you use a lending platform like Celsius or BlockFi and receive AUD, is that class as a taxable event? That's a very good question.
I'm not familiar with that.
I didn't think you would. Maybe there's a question like text Rid later, so about that. I'll talk to Rid a bit about that from the back end. But
is that like where you?
No. So say for instance you have one Bitcoin and you go and get a loan. You put the Bitcoin down and you get a loan for like an 80% loan, just hypothetically. So you get 80%. Now you've got to pay the interest.
You got to pay the interest, okay.
Yeah, well, you can take out a loan. So whether you invest it, which you'd be getting a dividend, which would be taxable. But if you were to put down one Bitcoin and you get back 80% of the Bitcoin and it's leveraged, you're paying an interest rate of 5% and you get 0.8 of the Bitcoin and you then go and sell that Bitcoin off to get it to fiat, you don't own that Bitcoin, you just borrowed it. Would that be a taxable event? You don't own it.
What do you mean?
You borrowed the Bitcoin. So let's say I have one mobile phone, right? Got the credit card on the back end. No, I've got one mobile phone here, and then I borrow another mobile phone from over here, and then when I borrow it, I sell that phone, get it $1,000, go buy something, and I'm going to pay that mobile phone back, get the phone back. So it's basically like if you were to go to a pawn shop and pawn your crypto, would you have to pay tax on that?
Yeah.
Even though it's not yours?
Yeah. Well, I mean, they give you carriage over, that's why they're lending it to you.
So you're just borrowing.
I mean, you're borrowing money to buy a house, right?
No, you're borrowing an asset off someone else. It's an interesting one.
It's an interesting one. Yeah, I'll come back to you, Sophie. I'm not.
I've had a lot of people actually ask me and talk to me about that personally.
I'd have to have a look into it.
Like that WhatsApp group that I set up today,
Okay.
that area, they actually believe that it's possible. So that's why I've got a bit of experience on it, but I'm not the accountant for that. But
I'll have to come back to you, Sophie.
Yeah. So
bit of homework for me.
They are printing houses. Yes, they are printing houses now, literally. But that's cool. So awesome, everyone. Just want to say thanks again for everyone.
Thank you very much.
Into your home and having us a part of your evening and having confidence and trust and faith in what we do. So on that note, if you do have any questions, Rid is your man when it comes to protecting yourself from a tax and planning strategy. Take advantage, like any discount with Rid. This guy's going to be booked out until December when it comes to the end of financial year. So yeah, if you get it early, you've got a little discount there as well. So if you need help, reach out to Rid. If you need help from my team on building that portfolio, setting the strategy right, you can contact us 1300 367 925 or email my investor relation managers at admin@binvested.com.au. We'll catch up soon. Have a good evening and keep killing it in this market. So it's a good time to have a good day. So have a good evening, everyone.
Thanks,
Bye,
everyone.